Right, good afternoon to everyone. Welcome to today's Indices Outlook webinar. Today we'll be looking at three different indices, the NAS100, the Dow Jones, as well as the SP500. Right, today is the 17th of July. My name is Sherman, and we will be going through some technical analysis on these three indices. Okay. Quick disclaimer, trading any forms of derivatives carries significant risk. Do ensure you fully understand the risk before you make any trading decisions. All right, start off with your own demo account first before moving on to your live accounts. And if you're ready to start your live accounts, right now there is a 50% credit on your first deposit, and then a 10% additional on your subsequent deposit. Okay, so just waiting on a quick overview of these three. The same thing, we're going to use some AI, some help from AI to come up with the research on the indices. Yeah, as always, if you have any questions, feel free to put it in the chat and then we'll be able to go through them. Otherwise, I'll just go through some high overview of the indices first before we start looking at the charts. Let me just readjust the screen so that you guys can see the top. Okay, this is the finished product from Google Gemini. So if you head over to Gemini, you can use the latest model. Okay, I think there is a limited use of the 2.5 Pro, but essentially it does all of the analysis for you, and you can check to see if it's looking at the right websites, the data that's pulling out, and make sure that it's not pulling out the wrong data. And then what you want to do is you want to consolidate all of this information into an infographic for a quick overview. You can click on this create infographic, and you can even create a website for it. Okay, so browse through all of these websites. Some of this might be new to you guys, but the more common ones are actually shown up here, right? So NASDAQ, BlackRock, Investopedia for some of these definitions. Okay, so a lot of this are kind of credible websites that are filtered out by Gemini to actually do the research for you. Okay, but overall, this is what you're gonna get. What you're gonna get by the end of the research, the quick run through, 5 minutes of AI research. Okay, so you have an all-time high for all three indices, so overwhelmingly above the previous high before the tariffs in April. Okay, so we saw the dip closing into March, and again April, only the start of the month was a dip, but then by the end of the month you can see that we have went up well above that drop. Okay, so for those of you who are not sure what the S&P 500 is made of, it's made up of 500 of the US companies, and the breakdown is of such. So if you look at the three of them, this is a more diverse, S&P 500 is a more diverse index as compared to NASDAQ 100, which is mostly made up of your tech stocks, and then Dow Jones 30, the largest few across industries. Okay, in terms of volatility, if you are a little bit more conservative, then you would probably want to be looking at Dow Jones 30. But if you're looking at overall higher risk, higher volatility trades, then NASDAQ 100 is for you. Okay, so they are highly correlated. So essentially, a lot of folks actually trade both these pairs together, right? they're looking at some sort of divergence and trade the lagging pair. And that will actually give you an indication or a signal for that lagging pair. So for example, if you know that the correlation between S&P 500 and NASDAQ 100 is highly correlated, and S&P 500 starts to move uh, in the upward direction versus NASDAQ 100, which is still ranging, then the potential for you to actually, that will be the signal for you to actually trade the NASDAQ 100 in the direction of S&P 500. They are highly correlated. Okay, a few things this month that we were looking at: FOMC minutes or the Federal Reserve policies, interest rates decisions, probably one additional cut by the end of September. Economic data yesterday we saw quite PPI, and then the day before CPI. So a lot of it's in line with the consensus of a interest rates cut by the end of September. Okay, but yesterday I think there was a big major news that was coming out that caused a dip, a quick dip in three indices, and that was the news, unofficially announced news of the Federal Reserve chairman being resigning, right? And then it quickly came back up. So we're going to look at that in the charts in a while. So overall, this is kind of like the gist of uh, the three US major indices. And so it's not really, there's nothing much that is shown here, and you can see why later in the charts as we are ranging just above that previous high. All right, so let's look at the charts. So this is the S&P 500. So I have the three listed here: NASDAQ 100, US 30, and US 500. I'm just going to go through one, and then hopefully we have additional time for the rest of them. Okay, so just mark out the all-time highs. So it broke above cleanly. When it retraced on the daily time frame, it retraced back down to here. This is the indication that that was the last batch of sellers that are willing to sell at the worst of price, and then you can't see any more movement to the downside. So immediately that would serve as a kind of an indication that there are no sellers below this point. This was created on the 7th of July, and then you can see how it actually touched back into this area again yesterday due to some news, right? So was it a coincidence that you can't find any sellers here, right? Okay, so today is the second last day of the week. We're going to look at the pivot points, see where we are on the weekly. Okay, still ranging, but bias is to the upside against R1. But if we were to retrace back all the way back down midweek into M2, then potentially this is going to be the range that we'll be looking for. Okay, so in a range, we want to use an oscillator to kind of guide where is the overbought and oversold. Okay, and this is you can only tell once the range has been formed. Okay, so this was the first point, second point, third, and then the fourth here gives us that high and the low. I'm just going to change this to a straight line with a solid line. Okay, so once we came down to this area, this was considered the oversold in a range. So what we'll be expecting is that movement all the way up to the highs of this week. Okay, so potentially from now to London, we'll be looking for buys. And then, I don't know, from now till New York, we'll be looking for buys all the way up to R1. And then if it breaks above R1, that will be a direct move to R2 and 4. Okay. R2 and 4 is the target for buyers this week. Okay, this indicator here is called the stochastic RSI. The indicator that you see with the R2 and 4 labels, those are your Wayne's pivot. Okay, so where's the support? This is the support that tapped, which means that any buyers who were looking to buy this low have been absorbed, have been absorbing the sell orders, and they have pushed it up to this area. So if we do in fact come back down to this level, you'll find that this area here will be void of buyers because the buyers are all in the market already. Okay, so where we are looking for at the next support, the next support will be R2 and 4, which is somewhere around here. Okay, so if we break 6,200, then this will be a nice support for us next week. And this will actually push down your pivot M2 all the way down to this level, which gives us a good entry for buys next week. Okay, so a lot of this is, again, this key line here. I'm going to change the color to blue. Okay, this blue line here would be our key resistance. And usually if we want to see what's the key resistance previously, it got tapped briefly at the start of 2 weeks ago. And we want to see if the strength of the buyers are strong enough. You want to make sure that the key area here is at equilibrium, right? So for us to have this level at equilibrium, then prices is most likely. We would ideally want to see prices hit 6,369 before coming back down this level as a key support. Okay, so ideally we are going to see some really bullish move first to this upside and then hopefully all the way up here. Cool. So this is the plan. You'll see the similar plan for your US30s and NASDAQ 100 as well. Where then should our entry be? Our entry would be somewhere around this level here. So you can add this indicator, the VWAP indicator, which shows you your volume weighted average price. Okay. And we'll be interested in today's VWAP. So early on today is a huge spike up against to the upside. Okay. And then now we're having this bullish flag formation. Okay, this is the bullish flag formation. How do we know if this is a bullish flag? A bullish flag happens after a big push to one side, to the upside. And then you see profit takers taking bits and pieces off. Okay. And at some point, new buyers wants to come in. This is a critical point. This is the next critical point, right? So on the 5 minutes, there was some resistance here previously. Now this is going to be where new buyers are going to come in. Initially, right, this was the last group of buyers. Okay, then they got stop out. So that's the continuation to the downside. And then below this level will be around this area here. Okay, so ideally you want to see a continuation of this bullish flag down, 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 and then break up. Okay, that's pretty rare. So what you'll probably see something like this, something like this, something like this, and then up. Okay, so where's the N3 that we want to go? We want to get in once it breaks out of this channel. and it comes back to a resting support level. Okay, so ideally you want to see this in the New York session, so around 8:30 to 9:30, and this has to be pretty quick in an hour's time, right? Breaking out of it early on in the session, and then back down to fill up all the remaining orders before moving to the upside. Where is the target? The target will be R2 and 4 for today, which is somewhere around this red line here. Okay, and the red line is probably the previous high. All right. So now without all of the indicators, you can see the setup a little bit clearer. If for us to actually go down to the further down, we usually want to see this entire group of buyers, this wick here. So there's a wick created here. If you are bearish, you would want to see a fill of this line. So cover up the entire fill and then look at half of the median price of that level, and then is it sell-off. But because this happened so quickly, okay, the unique thing about movement like this, which is very quick, okay, when it closes back above, because this is actually 45 points, right? And within an hour, it closed back up. For anyone or any systems that are using price closing as a calculation of either their oscillators or the trend following strategies, this movement will not be captured, okay, on the high time frames, right? But it will be captured on the low time frames, and you can see that this dip was in fact this push to the downside, okay, 54 points in 22 minutes. So anything less than 30 minutes time frame, any indicators or anyone trading less than 30 minutes time frame will be able to see this. Whereas if you're at even at the 30 minutes, you will not be able to get this as an alert, right? And your algos will not be able to see any of this. So within 30 minutes, recovered, and then as it pushes up, right? The way for the price to actually move to the downside is for something to be printed, something bearish to be printed, and then a lot of these algos that are looking at that bearish signal will follow in and sell towards the downside. But if you're not able to capture that signal, then all of these sellers, all of these algos will not be able to capture that, and that is where it will move in it will seem like it's a normal upward movement, and the algos will be giving a buy signal rather than a sell signal. Not sure if that makes sense, but yeah, so usually when we see something like this, a big wick, if it does not continue to fill up the wick in the next couple of hours, then we are not bearish on this move. Cool. Okay, so US30, I think it's going to be the same scenario. Okay, same thing, you can see the flag formation. After a big move to the upside, then you have this bullish flag. You look for the intersection between where all the rest of the sellers came in earlier on. and you want to look at these levels as a key support before it moves to the upside. So this is pretty straightforward. You have a previous high here, came in here, sellers were attempting to sell, and then they get stop out all the way up to this top before a new batch of sellers were available to absorb those sells, and then they got stop out. So you will probably not see this. If price do in fact get down to this level, it's going to be moving to the downside. Okay, because these are not active buyers, these are cascading buy stops that were triggered, right, from this sell-off. Okay, if you look at just this price action alone, okay, the optimal price is at this level. So as it comes back up, you're seeing sellers attempting to sell, sellers attempting to sell, and then sellers attempting to, and then they got stop off. If you want to see something with a push to the upside, okay, actually for US30 is slightly different from US500. US500 is still making that bearish flag, but ideally you want to see something like this and then it move up. Okay, otherwise it's going to be one of this news that's going to there's a speech 22nd of July, which is next week. Okay, so we don't have to be too concerned about that. Retail sales is going to be quite a big impact news, so 8:30 is going to be something that we'll be watching out for. And by 8:30, if we do not break out to the upside, then most likely people are looking to sell. It's a no-brainer statement, but that is how we want to look at this support level. Okay. Oh, NASDAQ 100, a little bit of a divergence in terms of that bullish flag. So the bullish flag probably will be looking at this level here, right? So just extend it, okay? You want to see price drop to this. So for NASDAQ 100, I would expect this to drop ahead of the rest of them. Wait a minute. That was okay. So this was 4 hours. Okay. So we're just looking at tonight's session. So tonight's session, let's look at the low time frames. Okay. So same thing. Yep. Not really a nice bearish flag, but it's still forming up. Okay. So the unique thing about this is when you look at the 4 hours, the idea that is that we are looking to sell off to 21,000. Okay, so on the higher time frame, it seems to look like it's bearish. Okay, so you got to watch out when we're looking at a lower time frame buy. Okay, all of these highs here, there are key levels to watch out for. They'll be the targets for our buys. Okay, if a steady stream up to the top, okay, our only level of resistance previously was here. So if we cut through this level, okay, if we do this something before the actual news, then it's probably going to go down. Okay, but if we steadily move to the downside, okay, that means there are not much of a buy resistance. This is where the buyers will be looking to buy up. Yesterday was bearish and they recovered. So for us to be bullish here, this is what we'll be looking out for. This is actually the critical point that we're looking out for. You have that sellers coming in here before it pushed up here. So this level is a very critical buy level. What we want to see, we want to see a break of that structure to the upside. So you can see that whenever we're waiting for a buy structure, it always forms this lower high, lower low. Okay, so what do we need to see? We need to see you can still form a lower high. If it doesn't form a lower low and it starts to show this by New York, then this is what we're trying to look out for. Right? We do not want to buy in a downward trend. Okay. And you can say, okay, it might be a 1 minute downward trend, but 15 minutes upward trend. Okay. But still, we also need to see, okay, where was the start of that bullish move. Okay, we're gonna look at stochastics. Once it crosses and it pumps to a higher high, we are looking at this candle here. But it tapped. Okay, in fact, this was almost an equal low. It tapped in here. So what we'll be looking out for is for us to create a higher low. We do not need to come down to this level, but if we do make a higher low on the stochastics, that higher low, we want to look at the point in time when your K line crosses your D line, and we want to take the median price of that candlestick. Okay. Cool. So those are the three that we're looking at. Slightly different in terms of which is most bullish. Okay. So which is most bullish? It is probably, or the most potential, it is probably the S&P 500. Okay. S&P 500, then the US 30, and then NASDAQ 100. Okay. In terms of the potential to the upside. Okay, so why is NASDAQ 100 with lesser potential? Okay, because the move were already made, and I think it was largely due to crypto stocks. And I think they passed a bill last night, or they advanced a bill last night. So yeah, AI stocks and crypto stocks, those are the ones that are pushing the NASDAQ 100 ahead of the other two indices. So these two are lagging, especially the US 500. So in terms of potential, US 500 would have the most potential if they maintain the correlation between amongst these three. Cool. Yep. So that's all I have for the indices. I do still have about 2 more minutes. So quickly look at gold. Right, go all the way back down to this base level. But on the high time frame, what does it? Okay, very nicely done. This slope up. So we are closing on to that slope. Okay, the upside potential, it's limited. Okay, but more likely. Okay, so the upside potential is limited, but it is more likely. The downside potential is tremendous, and the probability is much lower. Okay, so we kind of we're all waiting for that break. If it breaks down, then it's going to be quite a, okay. But same thing, you can use the AI research tool, and basically it'll tell you that physical delivery, it's 133 times or 150 times more than the contracts settled in COMEX. So that is an additional information that you can use when considering what Go is doing. Okay, essentially what it means is that if everyone who owns a gold contract wants the delivery of their gold in the physical form, there will not be sufficient gold that is mined in this world to deliver. And when that happens, then people who wants that physical delivery will pay more, and then prices of gold will skyrocket. Cool. All right, so that's all I have. Stick around for any other questions. But otherwise, that's what we have for today. Same thing. This is Gemini. For those of you who just joined us, using Gemini from Google to actually do your research. That is increasingly something that people are using. The other one is Perplexity, but I think we'll go through that in another session. All right, with that, you can go to this website for the past webinars. We usually upload them 1 month apart, so you should be able to get last month's webinar. And if you have any questions, feel free to email support@vantage.com. All right, if you guys do not have any questions, that's about it for today. And then I'll see you guys again next week.